Hello, everybody. This is John Blank, Zacks Chief Equity Strategist and Economist, and it is Monday, October the 9th, 2023. Today, we're going to do a deep dive into the top consumer stocks, and I'm going to do this in three parts. The first part, I'll go through the share valuations on those top stocks because the consumer stocks obviously value play here after the rise in the bond yields, long-term bond yields out there. So a lot of opportunities here if we get the growth and the value right on the share price. Profit fundamentals. Of course, we got to find strong businesses and we need to know how they're being valued from a profit perspective for investing properly in a sector like this. So mature sectors. So we also have balance sheet metrics on these top consumer stocks. We'll get through those. A lot of this will include the definitions of these various valuations and metrics so you can learn how to apply these metrics quite consistently. So first off, I want to point out these are my views, and I have a PhD, and they're not necessarily the views of Zacks Investment Research. I'll let you read this all later on at your leisure. So here are the top consumer stocks as we apply them, as you can see over here. Put a red arrow around October the 6th, last Friday, when we used market capitalization. Now, of course, as I've said over the last few weeks, we've seen a selling off because of the rising bond yields out there because people buy these for dividends. Now, here we have the market capitalizations of these seven industries in this space. This is consumer staples, right? Apparel, only two companies, Nike and Lululemon. Lululemon was super strong now, 48 billion, 47 billion in market cap. Nike actually three times its size at 150 billion in market cap. These two make up our apparel industry. Beverages, we've got Coke, Pepsi, Fomento. Over here is a Mexican Coca-Cola franchise, largest in the world for Coca-Cola. So Fomento and Coke, typically the same thing. You can see we've got a $19 billion market cap, 190 billion market cap for Fomento, 240 for Coke itself. Just amazing how big Fomento is relative to its parent purchasing of the Coke. Fomento and Coke, got to keep those in mind. Also down here, I've got the consumer product miscellaneous cables. I've got this company called Kenvue, ticker KVUE. You may not know about this one. It's big though, almost 40 billion. It's Band-Aid, Listerine, Tylenol, all kinds of things in Kenvue. International flavors and fragrances. Albertsons, of course, the big supermarket chain, and Service Corp International. Of course, tobacco, Philip Morris, Altria, and British American Pitaco BAT. Got those here. And the soaps and cosmetics, interesting space. Big companies. Procter Gamble, Unilever, Colgate, Palmolive, Estee Lauder, ticker EL. The space you probably know least about here is publishing. That does include the New York Times, which is slightly under 7 billion in market cap. And these other publishers, John A. Wiley and John B. Share Wiley, and Scholastic, which are 1 and 2 billion market cap. So not even large cap stocks. Only New York Times is large cap in this space. Of course, the food space is big. Very diversified mix between Mondelez, Kraft Heinz, and Hershey, and General Mills, and these other groups that have different exposure. So Cisco and Amsterdam Mills are kind of upstream. They're much more food service and commodity suppliers, so have to keep this as a much more diverse sector. Of course, everything has been selling off, like I said, because of the bond yields in this space. So we're going to come back to this particular chart over and over again. The main thing to do here is match the names with the tickers. So these are the names, these are the tickers. Come back to this space. This particular chart is critical for our discussion. All right, now I talked about market capitalization. Now I'm moving to enterprise value. Enterprise value calculates the cost to acquire a business based on the company's capital structure. So to calculate enterprise value, you take the market capitalization that I showed you, you add outstanding debt, and then subtract available cash. So enterprise value is not only the shareholder price, but outstanding debt. So if we actually think about this, who is biggest? Of course, let's start with the apparel industry, Nike. really strong company. You can see its enterprise value has been growing over time. Lululemon was the growth play here. Back at 7.5 billion in the 2017, it's much, much larger now. This was certainly the growth stock. New York Times actually was and is a growth stock. These other ones, Wiley and Scholastic, not so much the case here. But these three names actually showing some growth. Over here, Coke and Pepsi, of course. And as we talked about, Fomento down here, a much smaller in enterprise value. Keep this in mind. That tells you something very important here, that Fomento is not as valuable from an enterprise value perspective as Coke or Pepsi at all. And you can see Coke and Pepsi are basically giving you a nice entry point here because they've sold off right nicely. Philip Morris down in here, and BTI Mondelez here. So down here, oh, I'm sorry, Mondelez is here, and we've got Hershey there. We're going to see Hershey, Cisco, and ADM, and then there's this company Corteva, which I think I have discussed and provided its definition at some point. We will talk about that. Again, Procter Gamble, outstanding enterprise value here, 370 billion. It's not even close to anybody else in its space, and it's been, very well managed company here. You can see that. International Flavors and Fragrances, interesting picture here because of its blowing up and then coming down. I expect that's an acquisition that changed these quite dramatically. Unilever would probably be another one. Anyways, this is another place we can go. First we want to come here to the market capitalization and use those market capitalizations to get enterprise value so we can measure, the strength of these franchises and how they've been managed if they were really sold to acquire these businesses and how much people would have to pay for them. All right, share valuations on these top consumer stocks. This is fascinating. Starting here, sometimes I come later with this valuation. This time around, I want to do it up front. All right, EBITDA per share. What is the earnings before interest, taxes, depreciation, and amortization? And EBITDA over 10 is considered good. Over the last several years, EBITDA has ranged from 11 to 14 for the S&P 500. You may also look at other businesses in your industry and their EBITDA as a way to see how your company is measuring up. Of course, this is why we're doing this. But keep in mind, we wanted something in the 10 to 14 range. And of course, here you can see we got basically what people are telling you in the beverages space. Fomento, Pepsi, and Bud are in that 10 to 14 space. Some of these, though, like Coke, is actually quite low in terms of its EBITDA. So again, if you were looking for plays here, you might take the Fomento play. Stronger EBITDA per share, Pepsi too, relative to Coke. Over here, obviously, Lululemon is a phenomenal stock and doing quite well. Hershey's another name that looks quite strong here. So these are what you'd like to see. Hershey and Lulu are clearly outstanding. If they can keep this momentum, that's the big question. Clearly, Lulu was people getting out and exercising after COVID and buying outfits and stuff like that. And down here, you can see Hershey's just been running a bunch of acquisition, growing the business. The other one here to notice, ADM actually quite strong here. Mondelez, not so much. Corteva, what we talked about right there. All right, earnings per share in the forward 12 months. Again, this is looking forward at their next year's earnings. And again, look at Lululemon and Hershey and ADM. They're super strong stocks, as is Pepsi, by the way. Pepsi looks very, very good. Relative to Coke, it's much stronger. I think that's interesting to note here on this chart. Pepsi looks like the stronger franchise. Of course, Fomento, like we talked about, is maybe the play here with Coke versus its franchisor. Fomento has a much stronger earnings per share, and it's tracking higher all the time. That's a Mexican play. Keep that in mind. Of course, down here, we've got all kinds of things. Estee Lauder really took a big hit after, basically the opening of everything. There's a lot of this. These are basically going to be that things that are probably not listed in the United States. Interesting to keep this in mind because earnings per share and the share price is broader, largely depressed. So this is kind of something to think about. Again, apparel, beverages, the food stocks, and soaps and cosmetics. All right, price to adjusted cash flow. Of course, here's that Corteva I was talking about, ticker CTVA. It's a provider of agricultural products. It supplies germplasm and traits in corn, soybean, and sunflower seeds. It also supplies in the input information against weeds, insects, and pests. Corteva is based in Wilmington, Delaware. So ticker CTVA. I'm going to show it down here. That's the brown line. But again, just keep in mind, you probably don't know these names. Sometimes these companies get spun off. This is probably one that certainly didn't. Ticker CTVA is not one you know all about. You probably do know about Archer Daniels Smith. Keep this one in mind, a little different play. But what is a good ratio for price to cash flow? Anything below 10 is good. The lower the number, the better the value of the stock. The lower ratio indicates that the company is undervalued with respect to its cash flow. So who do we have here? Again, FMX at 7 down here. We've got a nice number for UL and ACI. KMB is actually not looking that good. They're about 16, even though we know about them. ADM is at 7, looks very strong here. The Wileys are still pretty high. They're not below 10. And of course, Lululemon price to cash flow as a growth company, at 35 times adjusted cash flow, super high. Not surprising there. So over here, I just want to point out, that we got that Mexican play here. And Bud actually is looking somewhat attractive. Then down here, we've got 3 plays that you might not know about. And over here, we got ADM. So let's keep going. Price to sales. The price to sales ratios is another profitability tool. And we're looking for the lower price to sales ratios, the more attractive the investment. So price to sales, I mean, you're paying a lot for Lulu, 4.5. Coke, you're paying actually 5. Again, FMX down below 1. Bud also there. Anheuser-Busch InBev is basically a European-owned company now. ADM and Cisco are the cheaper ones here. These are very different companies and areas. So in the food industry, this is really breaking out a wide expansion here from to Hershey. Of course, we know about this, but look at how it's been sold off, and you got an entry point here because the price of the shares have come down so much. Hershey looks attractive here. Over here, we've got all these things. Again, Estee Lauder probably looks attractive here. Look at how much it has sold off relative to a year and a half ago. It's back all the way into the 2018, 2017 period. Kimberly-Clark just staggering around here, has been selling off for years. Much tougher story. All right, now we're on to profit fundamentals. So we're going to get away from where we've been in terms of these companies and get into their actual fundamentals. All right, free cash flow. All we're looking for here is relative to its earnings before non-recurring items. So the more cash flow they have, obviously you would think they'd be a stronger business. Most of these are just below 1, as you might expect, because these numbers would track one another. But there are plays that can be pointed out on both sides. I don't necessarily think we should spend a lot of time here. I just want to point out this is a ratio that we can use. Net margin, obviously much more important here. Let's stop and spend some time on this. Profit margins do matter a lot. Of course, Lululemon has 11% profit margin. New York Times 7%. Nike actually not even as strong as Lululemon. This is really the critical thing. People really pay up for Lululemon stuff. But look at down here. Hershey at 16 is actually stronger, as is Mondelez to Lululemon. Probably didn't know that. Probably these are very stable profit margins, but they're very high ones. Procter Gamble at 17, 18. Profit margin, Procter Gamble is super strong. Has not really gone up or down, but a very strong, well-managed company. And of course, Fomento down in Mexico is only 8, so it's kind of low. It's a franchisor. Again, these are super valuable place to spend time. I like this area. Come back here and learn about these companies. Return on tangible equity is a metric used to assess a company's performance. It's typically used in banks and insurance companies. Here is what it is. The profit attributed to ordinary shareholders over the average tangible shareholder equity. So it's profit to shareholders over equity on the books. That's why I put it here. And again, we can see some really nice numbers out of Lululemon and Nike and the New York Times. Super strong companies. There's your Corteva. We talked about this company is actually stronger than ADM. Keep that in mind. You probably didn't know this name, and you can see it started probably 2019 recording in our system, I expect that's exactly what happened. It was spun off. So keep this in mind. Another interesting place is to check out the return on equity stories. They can be quite variable, but they are quite interesting at times. Earnings retention, the percent of net income that's retained to grow the business rather than paying out dividends. So for example, Lulu has 100. They're retaining all their earnings to grow. That's what you'd expect. Some of these are going to be very different and very widely spread because over here is what you really want, not the trend. That's not so helpful. But keep in mind, this is just how the dividend plays out, where they're paying dividends to you or they're building the business. So there are growth companies like Lululemon, but a lot of these are value stocks that pay dividends. So the question is dividend yield percentages to treasury yield percentages. This is the key thing. Who's left on the table above 1 after this big rise in the 10-year here is the key thing here. KHC is one of the names. International Flavors and Fragrances is another one of these names. MO, ticker MO, is really strong as well. So you can see these are all come down, and there are still some areas that are actually stronger than that 10-year yield at 4.7, 4.8%. So keep in mind that they're super interesting to look into these names from that perspective. Come back here again, look through these areas here. This is again relative to the treasury rise in the 10-year yield. All right, so now we'll finish up with the balance sheet metrics for these top consumer stocks. I want to talk about book value. Book value is the shareholder equity minus the preferred stock over the average shares outstanding. This is the book value on the company's books. Again, Nike, much, much stronger than Lululemon, much, much stronger. This is a super noisy one for Bud. No idea what's going on there, but you can't trust those numbers. Over here, again, you get some really nice numbers for different sizing of the food businesses. Very interesting stories. And of course, Procter Gamble, again, leading the way here down in soaps and cosmetics. Kimberly-Clark, not so strong in a book value context. So again, we're looking for that type of thing where someone's really growing an underlying book of business. Only a few small businesses or large businesses, but small niches like Lululemon can play out this way for you. All right, CapEx to total assets. This is the investments relative to the total assets, and increasing this ratio over time may suggest future growth. So Lululemon, let's take a look at that. It's been cycling up and down, but it's getting back to growth, as is Hershey. Talked about these names, particularly Pepsi again, coming out stronger than Coke for whatever reason. But then you see Fomento actually bumping up its spending in CapEx down in Mexico. Interesting to note that. Again, over here, we've got some nice trends. Some of them, Kimberly-Clark, of course, going in the wrong direction. Hayview, we've talked about, interesting to pick it up. And over here, we've got Corteva. Again, very, very little to talk about in this space. Again, all these charts have to be put in the context of the others. Cash flow accrual. This is basically net income minus free cash flow divided by total assets. When free cash flow is greater than net income, cash earnings are higher than accrual earnings. And the accrual is negative, and that is good. So we're looking for negatives, and of course, Hershey's right there, screaming at you, as is Cisco. Estee Lauder is right there. MO right there, and Lululemon actually also right there. Love to see that in this particular element. All right, reinvestment rate is the return an investor expects to make after reinvesting cash flows earned from a previous investment. The reinvestment rate is expressed as a percentage. So again, if they're reinvesting like Lululemon, or as you can see with Cisco, you really want to see that. These charts, not very helpful, but these final orders are helpful. So keep these in mind. A lot of times today, charts aren't as helpful as the final values today because we're buying things today as a stock investor. Depreciation and amortization, of course, not so important, as is tax rates. I just put them here at the back. So thanks for attending. I hope you enjoyed this. I do these every couple of weeks, and these slides you can get from Zacks and learn through the data itself what you'd like to do with a stock picking scenario like this. There are really great attractive opportunities out here. You've got to get a hold of these slides to do this analysis properly. So give us a call, 866-794-6065, or send us an email at strategycall@zackspro.com, or find us on the web at www.zackspro.com. Also, get a LinkedIn and Twitter areas of social media if you want to connect with us through there. Of course, the main thing is get us either email or a phone call. We'll help you out with these slides, and this is where you can really build your understanding, not of these ratios, but of these companies, of these tickers, and of these stories as they played out into 2023 here in this environment with rising long-term rates. Thanks much, everyone.